Hey traders, I've scalped gold for quite a long time, and I've actually used the 5-minute strategy that I'm going to show you today, guys. So now this strategy, we are mainly going to use our 5-minute time frame, and we are going to use these two moving averages on our chart. So now one of the moving average is a 50 exponential, and another one is 200 exponential moving average. So now here, we shall just wait for the retracement to our moving average. After identifying the trend, wait for the retracement to your moving average, then you execute the trade. This is how it's going to be done. So when the market is below your 50 exponential moving average, of course you're going to wait for the retracement to come to that moving average, then you sell. When it is above, of course it will be a buy. Now for example, right here, guys, okay, this market was below your moving average. At this market, it was below your moving average. Okay, so now this is what I mean by retracement. This market retraced to this moving average right here. Okay, it retraced your moving average, and it has to create for you bearish confirmation. It has to reject that moving average. You can see that when it retraced your moving average, it rejected it with a bearish candle. We shall use those confirmation like bearish engulfing candles and odd doji candles, morning star. We shall use any candlestick confirmation that you know. You can see that this rejection actually it made this market to sell down there, right? So now, so you can see that right here, guys, when the market actually retraced, you can see the retracement down there that the market made right here. So it retraced here to moving. Now you can see the fake out, right? We shall always pay attention to the fake outs. Now here it closed above your moving average, but it was faking the buyers that yes, it has closed above, let's buy, and then it came and closed below, right? Do you see the fake out? Then the breaking below our moving average, confirming to us that we are still bearish. The other one was just a fake out that the market had made. So now after that, actually I moved it down, guys. Okay, so now let's see. So this is a buying trade, guys. Okay, so now for the buying, of course the market has to be above our moving averages, right? So now you can see that here the market was above our moving averages, guys, right? Just retraced to your moving average. You can see this retracement. After the market retracing to your moving average, then it faked the sellers that yes, I'm closing below, and it came back inside our moving average, and we have bought. You can see that. Then also right here, you can see right here, this is the retracement to this moving average. This is a 50 exponential, right? It will always fake this because now gold, it has to collect revenue orders before it moves in the anticipated direction. It faked these people, then it created this bullish engulfing, and it bought, the market bought, guys. So now when you follow these two moving averages and you follow the trend, you get high win rate trades, guys.